Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex, indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.
What's going on, guys? What's going on? Hope everybody is having a great day. Let's go ahead and get this angle changed. What's going on, guys? You guys know me by now. Hopefully, if you don't, my name is Branks Trades, aka the resident indices analyst for the Trading Nut podcast. So every week I come on here and I break down the charts, especially for the indices and then, really any major currency pairs. So that's what I'm going to do for you guys today. So I know I'm on here a little bit earlier in the day, but I want to go ahead and get some time up and go ahead and go through some charts. I'll leave a couple seconds for people to hop online, but the drill. I love to see where people are calling in from. I love to see, where understand where people are calling, just because I love to see like the global aspect of everybody happening from all around the country, all around the world. We usually get some people in here that are coming in from like Africa, Europe, right, different parts of the world. So it's really cool. Australia even, right? So again, if you guys don't know me, I've been a day trader for about a decade. I'm still always getting better as a trader, right? But in the past 2 years, I've been doing this analysis, I think since like late 2023, or about late 2023, I think is when I started doing this. So, I want to come on here and really just kind of give traders, more transparency into like how this stuff works, right? In terms of, like what the days and ins and outs of being a trader actually looks like. So Tony, shout out to Tony. Appreciate your time. I'm actually going to go ahead and drop this link in the Telegram chat that I always talk to. And so basically I have a community on Telegram and on Discord, a free community for both, that I basically outline stuff and review charts and update stuff throughout the week. This week was a very slow week for me. I didn't really take too many trades, to be honest. But I think based on where we're going to be at, and we'll talk about that in a second, there's going to be a lot of kind of like a lot of potential moves up this upcoming week. So let me go ahead and drop this in the chat and then we'll go ahead and get started. I see we got about 13 people on. Like I said before, love to know where you guys are calling in from. So feel free to drop the location as you guys are logging on. I love to make these chats interactive because I feel like people get the most out of them. Usually you see me go through the pairs that I got to go through, and then I will kind of take some time out and go through, other charts that people want me to pull up too. So, so let me go ahead and tag that. And we're good to go. So, all right, guys, so let's go ahead and get started looking at this. So basically, if you know me, and I say this every week, I start with dollar, right? Because dollar is king, right? Especially if you're a Forex trader. I know on this channel, there's a lot of Forex traders. So having a good understanding of what dollar is doing is going to help you understand intermarket relationships, because dollar is king. So what I want to do is pull up dollar index. And so Long term, there's a couple things that I've been looking at, right? So we have this low resistance liquidity right here that I think at some point will hit for sure. We also have these relative equal highs right here. So at some point, I think we're going to come back up here and take this out. What's going on right now, though, is we are trading really in a kind of a range. We ended this week with violating this this fair value gap. And so ideally what I want to see here is potentially the market continue to go lower, right? This is a clean break of structure. We're violating this. The only thing that I'm looking out for is respecting this order block here. So we could see a bounce off of this, continuing up with the overall uptrend. And when we trade into fair value gaps, I have an order block sitting right there. I'm always kind of wary of that because the order block is kind of like the last line of defense, right, in this like bullish run. So what I want to see here is I want to see the market violate consequent encroachment of this if we're going to go bearish. All this means is that I want to see the market close below there if we're going to keep going bearish. And this is more of a long-term outlook. This is not really going to affect us for the day-to-day. In the day-to-day, I kind of have to trade with the idea that we're going to retest this fair value gap and then go down and really invert this. But I'm going to say consequent encroachment, right? And so this is now inverted. So really going to be watching this order block over the next few days to see how we react to this. And if we get a violation below that middle point, actually that doesn't look right. Hold on. It's a little low. Yeah, it's definitely a little low. Okay. Right there. Boom. Right there. So if we get a violation of that, like a close below it, it can wick off of this, but a close. Then we probably will see the market continue to run, and I'll be looking at this low right here, right? For us to run to on the targets. So we'll be watching the first couple of days of the week. There's really nothing here that I want to see yet, but just kind of looking at a daily perspective, if we were to get rid of this right here and really draw out kind of a daily version of that fair value gap, you can see that we also inverted this. So worst case scenario, like what I'll be looking, or best case scenario, like I want to see the market kind of retest this and then go lower, right? And I'll be looking kind of at that low there. This is today. Go to the day. Same idea. Retesting this and then going higher. What I don't want to see next week is us to close above this fair value gap here, right? So there's two things that I'll be looking at is how do we react to this zone? Are we retrading back into this imbalance? Are we staying below consequent encroachment? If you look inside of this consolidation, there is a secondary SIBI right here from that low to that high, and I'll draw this out for you guys. Ah, shoot. I'll put that back. So from that low to that high, and so ideally, I want the market to respect this zone. At best case scenario, we're staying below this wick, but ideally, at the minimum, respecting this daily imbalance. If we invert this, right, this is probably letting me know that this was all consolidation, a little manipulation down here to get traders thinking short. Remember, we are trading into that weekly order block, right? And then if we invert that, then we'll be going long. So I really want to see how Monday kind of treats us, and we'll go through news when this is over. But I want to see how Monday treats us, because if we invert this right on Monday, or maybe the early parts on Tuesday, you guys know that I'm a New York session trader. I do not trade London session. I just don't have the time to do it in the part of the world that I'm at in my schedule. So If we invert this, then I will be looking for this to go back up. And this, I'll have just considered all of this consolidation. But as of now, we're breaking structure. We're taking out lows. I want to see this go lower. So that's what I'll be looking for on Euro. Let me go to the comment section. Baltimore, Maryland. Shout out to Baltimore, man. I got people in Baltimore. We might be cousins, man. You never know. My whole dad's side of my family is from Baltimore. Stefan chart. This is dollar index. So I always start with dollar index. This is a question from Stefan. So the reason I start with dollar index is because this is going to be your fair weather chart, right? So you're going to get an understanding of the market relationships between dollar and the other currencies, especially if you're a Forex trader. If you don't understand where dollar is going, then you're gonna have a really hard time trading, because you need to know that, and you can use this as a secondary source. So I always start with dollar, and then I go into the other currencies and indices, because this gives me an idea. Indirectly, these should have an inverse relationship with Euro USD or Euro futures, right? Euro pound, I'm sorry, GBP USD or GB futures, right? You should have dollar should have an inverse relationship between these. So if dollar's going up, pound should be going down, euro should be going down, indices should be going down, right? So if you understand this up front, this kind of sets the tone for the week. And then, so basically we think we're going to be bearish. Let's look at dollar. I'm sorry, Euro USD or Euro futures. 6E1 again is the same thing as Euro USD. You guys look at these, you can see them. And I think we're in a really interesting place on Euro futures and Euro USD. There's a couple things here. So going back last week, I said to you guys that I didn't really want to trade this because there's just a lot of chop, a lot of consolidation going on. And at a weekly level, that's still kind of true. But daily level, we see some interesting stuff here. So I'm going to go ahead and clear this off because I got a lot of stuff on my charts. But last week, basically, we did a couple of things, right? We inverted this weekly fair value gap down here, right? And we started running to the, well, we did a couple of things. We took out this high right there, and we started running towards buy side right there, right? So in theory, what I want to see the market do this week is this. We also inverted this fair value gap here. So all of these signs, right, when the market starts inverting stuff and it starts respecting, one type of liquidity, but then disrespecting the other, it's letting us know what it's trying to do. It's trying to run for an old high, right? So I want to see the market get up here. This is going to be my target for this week on Euro. It's not that big of a target. It's only 60 points. So I'm going to mark out 2 levels, right? And the first initial level will be this level here at 1.0561. If you're trading Euro, the numbers might be slightly different, right? It's going to be 1.05325, right? But this on Euro charts, this structure here, right? I want to see the market get up there. We inverted this overall daily fair value gap too, so that's also a great sign, which is that one right there. So ideally, I want to see the market get up here, right? See if we can take out this buy side here. If we get a really nice run next week, and we'll look at the Forex factory to see what's the charts are looking like. But ideally, that's what I want to see is the market get up there, 1.0678. So ideally, that's what I'm going to be looking at. As far as areas that we could pull back to start the week off, we do have this inverted fair value gap that we just traded out of. So we could see something like this going into next week. And taking things higher. Once we get here, again, this is the kind of the overall caveat is we still are in a downtrend on the weekly time frame, right? So this is going to be big picture stuff, right? We still very much are in a downtrend. We haven't really broken structure yet on this weekly. Taking out this high, closing above this high will let us do that, especially this high here. And that's going to give us an idea of like where the market really wants to go. But until we get like a weekly break, we don't really have a great idea of where the market could run to. So like long term. So like over the next few weeks to months to whatever, right? And so really, I'm really kind of working off of the idea here that the market is going to run for buy side. If it's going up, it's going to run for sell side, or hold it bounces if it's going down, right? And so I'm always looking at the closest draw in liquidity, right, which is this buy side here, right? So that buy side is going to be the area that I think we could run to the closest. We could trade low as that. If you zoom in very quickly, I could also see us running back into this imbalance here to start the week off, right? Just really trying to get people sold on the idea that the market's going down, right? And then turn around and spend the rest of the week going chasing after buy side. So that's what I would like to see happen. And I'll be trading in line with this idea. Again, the couple targets that I'll be looking at coming into next week will be, again, this will be my overall target. I also want to see how the market's going to react over this high too. Anytime we take out our daily high, we know there's going to be money sitting above those highs. So I want to see how the market reacts to that too. So this will be the second level. The first level, if we at any point in time we start stuttering and we find it really hard to get through these levels, or it gives us kind of like our setup in reverse for my students who might be watching, then that's cautious. But I really want to see how the market reacts at each one of these levels, right? And then we'll kind of reevaluate. So that's euro, right? That's euro USD or euro futures, whatever you trade. Right now I'm trading more indices. So I'm looking at the euro futures, right? But it's the same chart, just I'm trading more futures. So I'm looking at euro futures. But if I was trading Forex, which to be honest, there's a couple Forex prop firms that I want to potentially check out this year. So I really want to check those out, and maybe I'll be back trading Forex this year. Who knows? But and actually, that's a good question. If you guys are traders, and obviously you guys are all traders, but if you're trading, let me know what you're trading. Do you guys trade more futures or Forex? Like, what's the avenue that you guys trade the most? Futures or Forex? That's the question I have for you guys. I'm actually going to drop this in the box. I would love to know. There's a lot of people. There's been a lot of people making the transition to futures, especially if you live in the United States. A lot of Forex firms have been disappearing, so everybody's been kind of doing this. It kind of sucks though, because there's a lot of good Forex pairs that you can trade. That you don't necessarily can't trade, right? Like when it comes, if you're a Forex trader and you want to trade indices, you only really can trade the majors. So like AUD, USD, USD, JPY, Euro USD, Pound, New Zealand, right? The majors, anything with dollar in it is a major considered, like those six major pairs. You can't really trade the crosses. So you can't trade like a GBP JPY or a GBP USD, right? Or I think it's Euro GBP the other way around. But you can't really trade the crosses, which kind of sucks because there's a lot of good volatility. GBP JPY pretty much moves like an index, like it moves. It's very volatile. So they're that kind of sucks. But a lot of companies, a lot of people in the United States have transitioned to futures because there's a lot of regulations going on, and so Forex is kind of an unregulated space. So I would love to get some regulated Forex prop firms in the US. There's a couple good ones that I've been looking at, like Funded Next and Blue Guardian, and I can't remember the other one that I was looking at, the 5%ers, right? And so I've been looking at those because I do think, even though they're more expensive, I do think they're easier challenges to pass. Please have the information on the Forex prop firms, both honestly, more futures, oil and gold, but I want to change. So I'm looking at some of these comments. We'll get back to the charts in a second, guys, but I want to make this, lively for y'all. So So Stefan, is it Stefan or Steve? I want to make sure I'm saying it right. More like futures like oil and gold, but I want to change to Forex. Uh, and then Tony says both. Honestly, I started with futures last year, but I've been doing Forex for 3.3 years now. So I mean, like the thing about Forex is again, it's unregulated. If you are going through the prop firms, and some of the prop firms have not had the best reputation with paying traders, and going through of a lot of stuff with that. Especially last year, there was a huge transition in a lot of people trying to change to futures because some of the prop firms weren't paying, and then more importantly, like a lot of the platforms were changing. A lot of them lost MetaTrader, right? Which is kind of like if you're a Forex trader, MetaTrader is like your you know main platform. So a lot of people had their in-house platforms that weren't working as great. So there's a lot of transition that's going on in that Forex space. I would, in an ideal world, I would love to go back to Forex trading. I think the market, I think the market itself, Forex is an easier market to trade. Um, I love the idea of trading the futures, the euro futures and the pound futures, and this is kind of the ones that I'm telling everybody to focus on, especially my students now, because it's just easier. And NASDAQ can overwhelm new traders. Like you can blow an account very quickly if you don't know what you're doing and if you don't know what you're looking for. And even if you do, sometimes the emotion kicks in and you just kind of go crazy. Sometimes high volatility is not the best, but um, so really, but it's really all the same thing. If you understand how to read price, it doesn't really matter what you trade. Um, I would say those challenges on Forex are probably easier to pass because they give you more breathing room, right? They give you more leverage, right? So they're going to be more expensive, but you can get a 100K account with $10,000 of drawdown, versus a 50K account with $2,000 in drawdown, right? So the problem that I see with people on the future side is that they're trying to make a lot of money with not that much drawdown. And so it causes them to blow accounts and blowing accounts, and they spend a lot of money on accounts, to get not that great a drawdown. So um, got robbed a year ago. Yeah, Tony, you said I think you brought this up before. You said you got robbed a year ago. What were you trading? Like what prop firm were you trading? Just out of curiosity. Um, but yeah, I mean that's an example there. Like when you do stuff, you want to go to reputable firms, on any side, right? Because I've been denied, and I'll say this: like I've been denied payouts with futures and forex firms, right? Like the funded trader crashed last year, and I think I lost like a 5 grand payout with them. And that sucked because I really was looking forward to that. I had a 200K account with them, made 5 grand, was trying to get my deposit back in that, and they're still sending me emails to this day about how they're going to pay me that money, and I haven't seen it. It's been a year, so I'm not going to talk bad about them because who knows? I could get that money in the future and everything could be right, but um, it's like you really want to make sure the firm you're working with is good. I've also lost, I've been denied. I think I got denied a 10 grand payout with Apex last year too. So it happens on both sides. It happens on both sides, but you want to make sure that the prop firms that you're working with are reputable and good. If you're a futures trader, Top Step is probably one of the better ones because they've been around since 2017, right? I have 2 accounts with Top Step right now, 3 accounts with Top Step, 350K accounts, and I'm gonna probably start trading those more. I started trading one. I have like a 2K profit on that for one, but I want to just trade those more and see. I just don't like the amount of drawdown that you can. You don't really have a lot of drawdown, right? Like you have 6,000 or $2,000 worth of drawdown per account. It's not a lot. So you have to get a lot of them to make it work, versus forex. So if you guys find some good ones, if you guys find that have a good prop firm that you guys on any side of the futures of the forex, let me know. I would love to check it out. Like I said, I'm gonna be trying a lot with both. uh the ones that I'm looking at right now are Top Step on the future side, Tradeify on the future side, Blue Guardian on the Forex side, Funded Next. Funded Next is probably like the number one choice that I'm looking at that I keep hearing over and over and over again. Funded Next, E8, and what is the other one? The Fivers. The Fivers is like a good one, but it's a slow challenge. But it's like if you work, if you're good at what you do, if you're good at trading, really good at trading, it's a good one because they'll give you a lot of capital to scale. They scale you every 10%. They double your account. So every time you get 10% growth, they double you. And your job is really just to hit 10%, 10%, 10%. So it's kind of cool to pace yourself too. And they've been around since 2016. So they've been around since like FTMO, and they're still available in the US. And still lets you trade MT5 and all that stuff like that. So yeah, and that's the thing about Apex is that like I've seen them pay people out, but I've only really seen them pay influencers. I can't say that they're not like, and I'm still not ruling them out. But and I'm not an influencer. Like I have a little bit of a following, right? But it's like I'm not to the point where I have thousands of followers, right? So like no one's coming to me and saying like we're gonna give you a deal. Like I have an affiliate link for some of those places, but that anybody can do that when you sign up. And I don't even really advertise that, to be honest with you. But so I'm not really in bed with any of these prop firms. I really just want to do the ones that are going to pay me the most. And I'm not really at the place in my career yet where I'm an influencer, so they can't really pay me. They're not going to pay me to advertise their prop firms. And to be honest with you, if I'm telling you publicly that this is the prop firm that I'm going with, like, you know, like this is the one, like I'm probably getting paid. So, but I'm never really, you know, disclosed. Like I haven't really done that. So anyway, so that's just quite, you know, conversation. But either way, you know, Forex futures, they're all good markets to trade. They all have their advantages, disadvantages. Forex is my first love. I think it's still the one that I like the most. I think the NASDAQ, the ability to trade NASDAQ and NQ is awesome, but it's not like I could still make just as much money trading, whatever. So let's look at pound futures real quick. I know we got off tangent with that. So pound futures are the same thing, right? So I'm looking at this area right here. I think this is an area of buy side that we could potentially come up and hit. So very similarly to Euro USD. I think that this is an area that we could come up and grab. And if we do grab this, then most likely we're probably going to transition and really start going for uptrends, which I would love to see, because I would love for us to get a long-term trend going. I think it's, you know, the markets are easy to read when they're trending. So dropping down to the daily time frame on pound futures again, you know, this is the same thing as GBP USD. We ran this high, we did close above it. So I'm looking to see how we react to a couple of things. We have this overall fair value gap right there. If we are going to stay bullish, and I cannot bet against a bullish trend at this point, right? Just because I need to see something fail before we start running the other way. So I need to see this invert before I can start saying we're going bearish again, even though I am keeping in mind the bigger time frame is bearish, right? We still technically are bearish. We have not really broken structure. Well, take that back. We ran this low on GBP. Actually, I think GBP right now is like the one that I like the most out of everything because the structure is clear. Is this weekly? So I'll say this: we ran this low. We inverted this fair value gap. Like that. And I would say we did technically break structure off of this by taking out the short-term high right there. So this is technically a break in market structure for bullishness. There's a lot of there's order blocks here. There's a propulsion block right there, right? Like there's a couple things here that could cause the market to reverse. But ideally, this is long-term what I'm looking at. I'm looking at this high to get violated. So I would love to see that happen. So this is kind of lending itself to a great idea of bullishness. With that being said, I want to see this fair value gap stay validated. I don't want to see this close in, and I don't want to see this invert. If this inverts, then we could either be back in that choppiness that we just been out of, or most likely we're going to, this is consolidation, this is manipulation, and then this is distribution. So this fair value gap right here is going to be key for next week. And I'm really going to be looking to see how we react to this. I do like the fact that we did close above this high though. That's what I do like. So it kind of lets us know that we still could be running, pushing higher. So I'll be looking for this because I can't bet against this, right? Like if you are seeing the market in an uptrend, you should not bet against that uptrend, even if you're in a downtrending market, until you see something violate that kind of tells you it's no longer interested in what it's looking for. So that's what I want to see. Is I want to see the market trade into this. If this inverts, then I will be looking to go back and continue on with the overall bearish trend. But just because this is a very balanced price range, I kind of expect the market to keep going up. So again, we violated this. We inverted this daily fair value gap too. So I like everything I'm seeing here in terms of like us continuing to go higher. So that's what I'll be looking for. I also love this. This is small time frame stuff, but I love seeing stuff like this because it gives me something I can really run forward with trendline liquidity. So I'm going to be bullish on GBP USD. Let's get to the fun stuff. This is NASDAQ and NQ. And I know like the trend right now is that everybody loves to trade NQ. They love to trade the faster moving stuff. But like if you mentally are not ready for it, you can blow your account very quickly, especially with these challenges. Like the craziest thing, when I sit back and think about it, like they're giving you $2,000 of drawdown because that's all you really have. It doesn't matter if you trade a 50K account or 100K account, but they're giving you $2,000 worth of drawdown to trade NQ, which is that's kind of crazy. And the crazy part about it is people will take, even with 150K funded futures funded account, you're taking $4,000 worth of drawdown and trying to make $9,000, and you see people just pretty much YOLOing it, and you're wondering why people can't get payouts. It's because they're not really giving you a lot of drawdown to really make serious money, to be honest with you. So you see people risking a lot. Lizzie said, shout out to Lizzie. Lizzie said US30. We're not there yet. So when I get to that Dow Jones, if you've watched me before, you know this, but Dow Jones is basically US30. So when I get to YM, it's going to be the same thing. It's going to be a US30 analysis. We're not there yet. We're good. We're just not getting indices. So yeah. So coming into the NASDAQ, couple things. So I love the fact. So we came into last week basically saying that we were going to be bullish, right? Yeah, someone is playing that Kendrick Lamar and SZA record in the background. I don't know if anybody listens. I feel like everybody knows who Kendrick Lamar is at this point. Like I feel like the little Super Bowl dance has been on my TikTok feed for the past 5 days, whether you liked it or you hated the performance, whatever. But someone's playing that SZA in the background. But Kendrick Lamar, man, he's having a year. Anyway, so coming into this week, this is the fair value gap that I tell everybody to watch, right? So basically 2 weeks ago, we saw the market drop into this trap. It opened up here with that crazy big gap, respected the consequent encroachment of this wick, and still closed back inside this gap. When that happened, especially when it closed above consequent encroachment of that gap, I figured we were going to keep going up. I was like, okay, cool. I love to see this. This is what I want to see. Then the market really took off last week, right? And really respected that. So we traded a little bit lower because we gapped down. We had another opening gap here where we closed there and then opened there and then ran right through that. And so this is pretty much on the verge of making an all-time high. This is last few weeks has been the craziest. Like I hated this price action. Like I don't know if anybody was looking at NASDAQ the past weeks, but I absolutely hated this. This is Christmas or the week before Christmas all the way up until now. It was 2 months of just back and forth bullshit for lack of a better term. So every once in a while you get weeks like that, like this from February to April was like pretty choppy. But outside of that, I mean, everything is, it looks like we're about to be back to making all-time highs. And that's the thing about NASDAQ is that this is an investment vehicle, right? Like people's life savings, their 401ks, everything they own is being invested into this stuff, right? These three indices. So it's like this thing will go higher over time. It's going to scare you a lot. Like you're going to have these drastic drops and drastic days. And if you just wanted to invest, just throw your, like if you get to the point where you don't want to trade anymore and you don't want to be a trader, just invest in these because it's going to go up over time. Like look at this. You could have thrown your life savings in NASDAQ. Bro, I'm going back to the daily time frame. This is 2018. You could have threw your life savings in NASDAQ 10 years ago and you would have tripled it already in 3 years. Right? And even if you just go back to the pandemic, like you would have like doubled your money already. I think something like that. Yeah. It's 8,000. You would have almost, tripled your money since the pandemic. So if you just want to throw your money in NASDAQ and just watch it grow, it will do that. Like that's the point of this. But we want to day trade this because we want to make a lot of money in a short amount of time because we are financial deviants. So what I'm looking at here is this all-time high. This is the daily time frame on NQ. I want to see the market run up here. Right. And so what I'll be looking at here is this. I'm going to clear a lot of this out. It's a lot of BS now. Daily time frame. Look at this fair value gap here. We just ran old buy side liquidity, so now we got to find an area sell side to run into and get rid of it. This is going to look like the most ideal situation. So now that we're kind of getting to the point where, we're out of this, we're going to be out of this choppiness. We're still inside of this daily fair value gap, right from that high to that low, right there to there. So we still got to be careful, but we're really close to inverting this. And we did run these relative equal highs, right? It's these relative equal highs that were sat there. So ideally, this is where I'm looking, but also we could be very surprised. Like we could run these highs, we grabbed a lot of buy side, and then we could head back down here. Most likely, though, I think we're heading for this high. Just like Euro and the other ones, I'm going to be really watching this fair value gap, right? Because I'm going to put this as key level. Key level, right? That is going to be known as my key level because if we invert this, we are probably running low. We're probably running really low. Like we're probably going to take out all this liquidity that we've been building up here. So I really want to see the market get back up here though. We're very close to inverting this gap. Technically, we're still in this. I want to buy in a good area though. So I really want to buy under the weekly low in this fair value gap. So somewhere in here is the most ideal area that I want to see the market run to. So what about German 47? Are you? I wonder. I was going to ask this, man. I feel like you might be based in Europe. Are you based in Europe? I'll pull that up in a second when we get done with this. It's basically the same as the other ones, but I don't really trade it because America. But I'll pull that up in a second. So let's go to US30 though, or let's go to ES and then we'll go to US30. So this is ES. Again, it's the same thing as US500. Where's my ES? S&P. Yo, where's my ES? So like I'm trying to really focus in on me trading currencies more. That's just kind of like where I'm at. I feel like it's not that I can't trade NASDAQ at all. I can still, obviously I do these analysis for any of them. It's just, you can break down anything on charts, but what do you like to trade the most? And I think I like to trade, the currency related stuff more than NASDAQ at this point. So, and I think it's easier for beginners to understand and see price action because they can see it's slower and they're not as reactive. It's very easy to blow your accounts in a market that moves very rapid price swings and takes off. Even if you understand what's going on, you still have to understand emotionally and you have to understand your triggers. And so if you know that your triggers can be set off by very large price swings and very rapid movements, it's going to cause you to, go into knee-jerk reactions. So I'm trying to work with my students on something that's slower so they can understand these concepts that I'm teaching. And then if they decide to move to something faster, that's on them. But I just think currencies is the best market to learn. So this is choppy. It's going to be the same idea, right? Like, I want to see the market get up here. What I don't like, though, and someone actually pointed this out to me online, because I don't really look at divergence a lot when I trade. And again, someone asked me about this, I think last week on the call. Like, do you look at divergence? And I don't really use them on a day-to-day, but I will make a note of it. Again, this is someone, I was talking to somebody on Threads earlier about how we use intermarket relationships and how we kind of how we use intermarket relationships and how we look at price action. And we see this major price swing like this, where ES or NQ really failed to go higher. I'm sorry, what is this? ES really failed to go higher, but NQ did. It took out high, right? See that? So this is called SMT divergence. It's basically just this idea that, like, the market, if these markets are correlated, if one's going higher, it's digging for liquidity and the other one is not. So that means it could potentially be trying to reverse, right? It's basically saying, like, I got all the money I need. I don't need to go up here. Well, this one's saying I do need more money. So this could be saying that we could be looking to reverse. It's something that I watch. I pay attention to it, but I also look more at the price action, what's going on, right? And so, again, I will stick with this bullish bias. So I do want to see the market go higher. Boom. Right? But I am wary of the S&T. I'm also wary of the fact, the things that I do like here too is we did invert that fair value gap. The one on NASDAQ that we did not invert that gap, we did invert it here at least. So I do like that. So I want to see the market do something like this where it trades into that and then goes higher. Best case scenario. So yes, we're bullish. Let's go to US30. US30 is probably, yeah, bro, this is bullish. I want to see the market take out these highs. Would not be surprised if we started. We've gapped the last 2 weeks on all the charts too. So would not be surprised if we got something very, very like aggressive push down like this to get everybody thinking short for the week, and then took things higher like this, right? It's coming back up here. One, because obviously investment vehicle, like I was talking about earlier, but these relative equal highs right there, just asking to get hit. So that's what I'm looking at for that to go higher. But pretty easy call. Again, same thing on YM. If you're looking at YM, oh, YM is actually a little bit lower. I still see these highs up here. I still want this to get hit. I'm gonna look at this weekly time frame just to see. I don't like that. Do not like that. Did we trade into that fair value gap? Huh. Yeah, I don't like the wicks that we're getting off of this. So let me say this. If you're trading US30, which again is pretty much the same thing as YM, I want to see this. I want to see this invert this fair value gap. Technically, these are technically the same pair, but they do have different volume levels. So I want to see, I would not want to go long in this until we close above this gap. We need to invert this. So that needs to happen. Like we need to close above this. See how we haven't yet? We need to close above that before that happens. So something like this, right? But until that, I wouldn't feel great about trading that. So maybe like a daily close or a 4-hourly close above this high. So what I would want to see before we go take things higher, again, if you're trading just a straight YM, this looks a little bit scarier, but a little bit more opportunity for it to invert if it gets up here. It's going to be very clear. So I want this to fail. But these wicks coming off here are kind of scaring me. So I would say like I would not look for to take any longs in this until this closes above here. And then it might retest the gap and then take things out. But I need to see this close up here if I want to take things long. Otherwise, just kind of chopping back and forth between this fair value gap and that one. So I need to see this close high. So this is a really good question. So Lizzie said, if the market breaks the highest high and there's no information left, how do you set your target? So the way that I set my targets based on these higher high situations, because this happened a lot last year, and honestly, if you trade indices, this will happen a lot, right? Because these are all at one point new highs. And so basically how I trade these is, so let's say we go, I don't know, just to give you an example, go back on NASDAQ here. Right, this is at one point was the highest high on NASDAQ. This was 3 years ago. Yeah, you would invest your money in NASDAQ. Everybody can day trade, but invest money in NASDAQ too, because this thing moves, and just passively investing you're going to be wealthy, right? Anyway, so let's say this is the highest high at one point. This was the highest high of all time. So my whole thought process here is I'm trading to this high, right? And if once we get to that point, there's no, like, once we break in high, like if we speed this up and let's say, actually, let's go back a little bit further on this. I'll show you. If we get here, right, and we say this is the highest high at this point, and this is the candle we're trading off of, my only target can be this high because we know that liquidity exists above, right? And I don't want to short this, right? Because like, why would you short that, right? You can, like, there probably would be a short-term opportunity to short, but like trying to short this is like trying to catch a falling knife. Like, until the market gives you more information, this is a dumb idea, right? So you want to set an initial high like this, and then the market needs to come back and take that, right? And but once it takes that, you need to get flat. Like you need to be out of the market, and you need to wait for something else that you can hit that lines up with your bias, right? So if you don't have that, you don't see that, and it's time for you to kind of get out of the market until you see that, right? And obviously, if the market breaks structure or something like that, and it gives you an inclination that's going to want to go down, like breaks in structure, violations of things, liquidity markers, whatever, then like you could start to look for downward price action. But you need to have that confirmation and probably still recognize that you're still probably in an uptrend just to pull back on a higher time frame. So um, for me, like I really like trading with the trend. I don't like counter trend trading. So once it takes this high, like if it runs up there, then I'm done. I can't do anything else because there's no other highs to project. At least maybe the next week. So that happens a lot on NASDAQ. That's a really good question though, because that happens pretty much like it's gonna happen probably in the next couple weeks, right? Like we're probably gonna take. Um, like we're probably at some point gonna take this high, right? So like what happens when we get there? Um, so yeah, that's a really good question though. So that's all I got. I'm gonna look at German 40 really quickly because someone asked about that. If you guys have any other questions, feel free to throw that in there. So like right now, it's a great example. I wish I would have looked at this one first. So German 40 is trading pretty much at its all-time high, right? So the only thing I could really project to as a trader is that like I can't really like, I could just buy and hold and right and just hope for the best, but like I feel like investors buy and hold, traders have entries and exits, right? And you could be both. You can do both. You can definitely have a long-term portfolio because this will probably rise over time, right? Um, but if you're trading something, it means you probably have a little bit more leverage on the play, and you can't really withstand a huge amount of price swings. So uh, you need to really get in and out basically, and have a targeted exit and entry for everything. So I would want to see German 40 do something like this. Best case scenario is a trading back to a premium or back to a discount level. Again, if you have no idea what these terms I'm talking about are, join my free Telegram. My free Discord. I'm gonna post a link for that in a second. But I want to see the market get under that 50% level. So trading back down here. There's also an order block here. So that kind of looks good. So ideally, would love us to trade here. That's best case scenario, right? I'm gonna drop down, and this is on the weekly time frame, so we might not get that. If we go to the daily, couple levels that I would like to see hit. This is big term, big picture. Daily time frame, based on this particular time frame, I would love for us to come back into this order block or somewhere in here. So fair value gap right there. There's an order block right there. So I could see the market doing something like this where it comes down here, wicks maybe off of that fair value gap and respects that order block, or it just comes in here altogether. So one of those two levels, but that 21,084 level is what I'd be looking at. And then bigger term picture, we could see the market come back down here. Like it could come down here, bounce, kind of consolidate, go, take a high, and maybe come down here, or just doesn't come back down here altogether, right? But those relative equal lows right there, this is a very extended run, so who knows? But ideally, weekly time frame, that's what I'm seeing. Daily time frame, this is the first level that I would want to trade to if we did see a bearish move, especially if we invert that gap right there. So that's what I'm looking at. So hopefully that makes some sense to you guys. But again, all-time highs is like I can't really project anything higher than what I see there at that high. So hopefully, hopefully y'all got some value out of that. If you are interested in becoming part of the Telegram group, or I keep saying Telegram, the Discord group. I just switched everybody over to Discord, but it's a free Discord. Basically, you can check that out here. It does not cost you anything to join and sign up, but I basically do updating analysis throughout the week. So this is what the markets look like now, right? The market's closed. My analysis could change based on the upcoming week and how the market opens up. So check out that link, and you guys can stay locked in with me. The best way to reach out to me on social would be Brinks Trades. So any of these social networks, YouTube, Instagram, I'm on TikTok too. I might be taking a break from social media, only because just realizing that I had a chance to sit down with a performance psychologist couple last week, about a week ago, and just want to keep pointing some things out in my game that I want to fix. I want to keep getting better at, and one of the things was kind of like the feeling like you need to prove yourself for social media. So I'll always come on here and do these breakdowns, but like a lot of times I'll post a lot of profit shots on my Telegram, and I don't think that's good for my students, and I don't think it's good for myself too. Like the last one I posted was like a $6,000 win that I had, not this last week, but the week before on NASDAQ. And I feel like sometimes psychologically, like I'm more trying to win the trades to post versus like actually trying to execute, move on. So I might not be posting as many screenshots and post profit shots on social media. But you guys can find me there. You guys can find me in the Telegram group. The best to get a hold of me is the Telegram group because I see that every day. For my mentorship students, I try to go live at least a few times a week. Last week the market conditions were great, and then kind of halfway through the week I got sick, so I didn't do my live stream then. But this upcoming week you guys are gonna see more live streams. Right now, again, I'm really focusing on currency futures, right, and currencies in general right now. So so that's what I want to see. So hopefully you guys will get some value out of that. But join the group. It's free. The mentorship stuff obviously is for the live stuff in the course. For the mentorship students, again, it's live trading, of course, and then pretty much access to me on a weekly call every weekend where we break down, wins, the basic stuff, the losses, and like how we can improve as traders. So that's kind of the benefit of being a mentorship student, kind of seeing all that stuff put together. But as far as just being in the chat, being a community of traders, it's good. It's a pretty good community to be in. So I would join it just off of that, and at least get something free, right? Like, man, if I could find some people that did more free stuff when I was first coming along, I would have saved a lot of money. But all right, y'all. So I hope everybody appreciated this. I'll stay on for any questions anybody has. Otherwise, I hope you have a good rest of the week. Go touch grass and have fun. I know trading can be stressful sometimes, but enjoy the process, enjoy the ride, and I mean, it's just a game, right? So so stand on for any questions. Oh, one last thing. Sorry. I wanted to go to Forex Factory and look at the upcoming news for this week because that kind of plans my trading week out. I keep saying I'm going to do this for everybody, and I don't do it all the time. So Monday, 10:30 p.m. is a lot of red folder news, right? It looks like kind of like the FOMC for Australia. So this could be a very crazy overnight session, Asian session for Australia. So kind of be watching that. Tuesday, we have CAD CPI. There's not really a lot of economic news, but London session could be kind of crazy for dollar pound or pound dollar. And then tentative, we keep having this tentative with President Trump speaking. I don't really know what this is about, and I don't really. He just randomly speaks. Like he's gonna be on the calendar pretty much like every day, which it could be good or bad. FOMC meetings minutes at 2 o'clock. So this FOMC is on Tuesday. So this is gonna be a week where I probably will trade Monday, Tuesday, Wednesday, and try to get out. I'll call it a week. 8:30 unemployment claims, and then 9:45 news, a string of news. It's gonna happen all morning. So Friday could be a very crazy day too. So I'm gonna be looking to really take trades Monday, Tuesday, and Wednesday. And I'll probably be out. I think Tuesday. What do we say? Tuesday had 8:30 news. There's a lot of NZD news. I would expect NZD pairs, if you're trading, NZD USD or AUD pairs, to have a lot of volatility this week. CAD too. There's nothing, no red folders really that we're used to. So I'll be trading Monday, Tuesday, Wednesday, and be done by Wednesday, probably. So anyway, hope you guys enjoy this. Hope it helped. And yeah, catch y'all next week. Hope everybody has a good week. Peace.
Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Hey, start trading Forex indices and commodities with up to 800k of Blue Guardian's capital risk-free. Just pay a small one-time fee to take the challenge, hit a profit target and get funded. Then keep up to 90% of your profits and enjoy fast weekly payouts. Now for futures traders, Blue Guardian Futures offers up to 450k in funding with 100% profit on your first 15k. With low targets, no activation fees and unlimited resets, it's one of the best deals in the industry. Visit blueguardian.com or blueguardianfutures.com to start trading today and grab their limited time discount code.